These behaviors help your score. On-time payments, lower balances, old accounts, good mixes of credit, revolving in installment loans, real estate, home equity loans, few inquiries or requests for credit. A word about credit scores. Long considered an important component of your finances, credit scores are even more important today as companies more than lenders use them. A higher credit score is needed today versus a year or two ago in order to be approved and be approved at the best rates available. Whereas a 700 through 720 used to be considered a solid FICO score, aiming for 760 or even higher is encouraged these days. Capacity, your financial ability to make payments on additional debt. Includes a review of your employment history, income, and expenses. Debt to income ratio is examined. Front end ratio includes mortgage expenses. Back end ratio includes all debt. Front end ratio example: mortgage, $500 a month. Income, $2,500 a month. Front end ratio, 20%. No more than 28% for mortgage. Back end ratio example: mortgage, $500 a month. Auto, $150 a month. Other expenses, $200 a month. Income, $2,500 a month. Back-end ratio, 34%. No more than 36% for debt. Collateral, any item of value which can be sold by the lender if the loan is not paid back. For example, homes, automobiles, deposited money can be used as security for some loans. Collateral can improve the chances of being approved for a loan. Activity, to lend or not to lend. A customer recently applied for a loan at the bank which you manage. What would you be looking for in each of the following areas of this applicant in order to feel comfortable making this loan? Credit history, employment history, income and expenses, savings, collateral, residence. Choosing the right lender is just as important as choosing the right loan product. Lenders must provide a fair evaluation of those seeking credit. Not all applicants have the same financial backgrounds, and some pose more risk that they will not pay a loan back. This is known as credit risk. Sometimes a lender may choose to not make the loan at all. Other times, the lender may make the loan, but at a higher interest rate in order to compensate for the additional credit risk a borrower may present. It is illegal for lenders to discriminate against applicants and borrowers based on many factors, including race, color, national origin, religion, gender, marital status, or age. These are many regulations designed to help protect consumers in the lending process, including Fair Credit Reporting Act, Fair Housing Act, Equal Credit Opportunity Act, Home Mortgage Disclosure Act, Truth in Lending Act, Real Estate Settlement Procedures Act, the Fair and Accurate Credit Transactions Act. Responsible lenders will explain all product options available, provide clear disclosures and forms, make sure the loan fits your needs and it's affordable, provide good customer service by answering your questions timely with the convenient and timely handling of your loan payments, and provide a clear loan statement to you each month, and will never pressure you into signing today, hide any fees or costs, ways to borrow. There are different ways to borrow money, including face-to-face at a branch location, via mail or phone, over the internet. The following are some common types of loans: credit cards, mortgage loans, auto loans. Understanding each type of loan and what to look for and ask about can help you save money. Credit cards. When used responsibly, credit cards offer convenience and can be more safe than carrying cash. Be sure to choose the right card for your needs by comparing APRs and interest rates, grace period, method for calculating balance on which interest is charged, any fees that may apply including annual fee, late payment fee, over credit limit fee, return check fee, cash advance fee.
For any credit card you may use or carry, know all the fees associated with your credit card. Know the APRs which may apply to purchases, balance transfers, cash advances, including any introductory offers. Always make at least the minimum payments by your due date. Know when penalties and fees may apply. including how interest is charged or if your rate may change. Know when you will be able to pay off any purchases that you charge to your card. Understand how much interest you will pay in addition to the purchase price of an item if you are not able to pay your balance off in full. Keep your balance to no more than 30% of your available limits. Mortgage loans. For many, homeownership will not be possible without borrowing. A mortgage loan is likely to be one of the largest financial transactions in a consumer's life. Choosing the right product and the right lender is critical. Preparing financially to find a loan at the best terms possible can have dramatic consequences. Example: loan amount $150,000. Loan term 30 years. The rate 5.5%. The payment $851.68. At a different rate of 7.5%, the payments would be $1,048.82. Lower rate equals $197.14 lower payment for 360 months. Know the following about your mortgage loan. What is the total amount of money you're borrowing? What is the interest rate and APR on your loan? What type of loan you have? Fixed rate, adjustable rate, interest only, balloon? If your loan contains an adjustable rate, when can your rate payment change? By how much can your rate and payment change at each adjustment period, annually, over the life of your loan? What is the highest the interest rate and monthly payment can ever be? What are the monthly payments? And do they include amounts escrowed for property taxes, insurance, etc.? Auto loans. When borrowing money to buy an auto, there are generally two options available. Borrow from a bank, credit union, or other lender. Arrange financing through the auto dealer. Both methods of borrowing require that your finances be in the best shape possible. Knowing ahead of time that your credit report and credit score are strong can allow you to negotiate with confidence. Before you borrow, ask yourself, do I spend less than I earn? Do I follow a budget each month? Am I saving money on a regular basis? Do I have financial goals and am I taking steps to achieve them? Do I have a strong credit report and credit score? Is this purchase a need or a want? Will I be able to pay off this purchase before the item has served its purpose? How much will this purchase really cost once I factor the interest and fees for borrowing? What will happen if I am not approved for this loan? Do I know how much I can afford to borrow? Do I know what the current interest rates are for the loan I am considering? Wrap up. Borrowing money responsibly can help you achieve your financial goals. Access to credit at the best rates and terms available is crucial. In the next 30 to 60 days, review your credit report and credit score by visiting www.annualcreditreport.com for your free report. Set up a budget or review an existing one for your household. Savings, if you haven't started yet, get going. If you have been saving, save a bit more. Visit www.yourmoneycounts.com for more information.